We bring in Matt Miskin. He is John Hancock Investment's co-chief investment strategist. He's joining us from Boston. So Matt, it's good to see you. So as we talk about what's going on with stimulus here, how vital is it for an agreement to come to pass in order for stocks to continue to recover and rally?
Well, the stimulus catalyst has actually started to fade in our view, and the market's now looking much more for a cure or a treatment or a vaccine as it relates to the virus. And to us, I mean, this morning, again, you're hearing, some good trials, some good information around developing this treatment. And, I think what politicians are struggling with is, how much do you spend if that treatment is around the corner? And as we hear better things, we really think that's what the market's focused on, right or wrong. It's a very volatile thing to rely on. It's very uncertain, and it puts the market actually in a pretty precarious position, given everything going on.
Well, that's what I wanted to ask you about, Matt, because I don't know the exact statistic, but it's something like only a third of all vaccines for infectious disease actually pass phase 3 trials. Is the market setting itself up for some kind of big fall if these vaccine candidates all fail to get out of phase 3 human trials?
Yeah, I mean, it seems like it's overly optimistic at this point to make that kind of assumption, to look at these, some of these stocks are trading at pretty high multiples right now going into earnings season. And without some sort of, really change to the health landscape around COVID-19, we do think that they're pricing overly optimistic resumption of earnings, resumption of business activity. And if anything, it looks like it's going the other way. So we're really advocating more defensive posturing going into the back half, increasing quality, meaning looking for businesses with higher return on equity, better balance sheets. We thought we were going to get more cyclical and more risk on at this point. But as Maddie was talking about before, the world has changed so quickly. And now we're kind of back into this more muddle through best case scenario for the back half for the markets.
So Matt, what does happen if we see everybody riding this optimism wave of a vaccine is in late stage trials, or we have Fauci saying that we may get it this year, or that it looks likely that it comes this year? What happens if we don't get that and we have investors acting as if it's going to happen now?
Yeah, I mean, so treasury bonds would probably rally. Gold and other safe haven assets would likely get another bid or a more prolonged bid in terms of those asset classes. And we look at the healthcare sector right now more broadly. And while, this is a race for that vaccine or treatment, we do believe eventually there is going to be a breakthrough. And the healthcare sector right now is incredibly cheap. It's actually trading at a 25% discount to the overall market on a forward PE basis. You might have to wait a little while for the catalyst to play through, but those businesses may be of the best position right now to eventually outperform in the back half. And if we get a rotation off this tech trade that just keeps going in momentum, that might be a great value opportunity to wait out an eventual catalyst as it relates to that breakthrough you were mentioning.
Hey, Matt, all this stimulus spending going to add 4 trillion, 5 trillion to the national debt in a year. Doesn't matter. No big deal.
Oh, it definitely matters. And it's going to be a long haul to get ourselves out of this. But we'll have to grow, and we'll have to grow and tax on that growth. And, I think about the currency markets a lot, and currency should reflect these deficits. The thing, the euro is really starting to strengthen versus the dollar, and the dollar is at a critical juncture right now. It's actually breaking below 96 on the DXY this morning, something we're really honed in on. But, Europe is also in the process right now of formulating another fiscal policy bill. Their deficit's an issue. Japan's got a large deficit, and a large debt level. So, it's a relative game. We do think the dollar might be in a spot here where it's prone to weaken a bit more if another fiscal policy push does come through. And we have to think about that because international equities might come back with a currency tailwind if the dollar does drop a little more because of this deficit. You want to make sure you have some exposure to that in a broader portfolio.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.